Hello and welcome to this Markets Today special. I'm Udayan Mukherjee, and with me today is a very well-known and admired investor, Vijay Kedia, to talk about his small cap investments and how he sees the roadmap from here. Vijay, wonderful to speak to you again. How has it been for small caps? Because a lot of small cap portfolios over the last 1 year have not done very well. Things have started improving now, but what's been your experience over the last year or two with small caps?
Udin, thank you very much for having me. First of all, I am very happy with these small and mid caps where I am investing. And what my experience is that index is still yet to touch a new high, or may have touched briefly. I don't know. I'm not tracking it. But the small and mid caps have risen 4 times and 5 times in last 2 years. So my experience has been very good. So I'm happy.
Mm. One part of small cap investing which excites a lot of people these days is anything to do with the capex theme, but construction, engineering. You've owned stocks like Elecon and Patel Engineering. Tell me about how you see this space and whether you see multi-baggers playing out as the capex thing unfolds over the next 3 or 4 years.
Of course, Sudan, I'm very bullish. And as I always say that stay in a sunrise industry at any cost and stay out of a sunset industry at any cost. So I think now this is the beginning of this capex and infrastructure cycle. And of course, I had bought Elecon Engineering 2 years back. It's already a multi-bagger 3 or 4 times from the bottom, but I think the story is just still intact and it's just starting. And what I hear and what I read that so far whatever capex happened in India was done by the government. Now, private capex is still to catch up. And I was listening to one interview of RBI governor that in a CII meeting was saying that the capacity utilization in private sector is somewhere around 73 or 75%. But CII has the different opinion. Off the record, they were expecting or they were saying that it could have reached to 80%. So now I think this private capex has to catch up. And so I think we should get 3-4 years of a straight runway in this sector.
Which parts of construction and capex are you most bullish about? Because there are many ways to play it. Some are playing it through capital goods, some are playing it through construction companies, some are playing it through pure engineering companies. What's your personal preference for?
So my personal preference is actually I look for cheap shares which are available at a cheaper or reasonable valuations. So these capital goods and all, they are very expensive for me. I never bought them. So that is why I chose a company like Elecon Engineering, which was available at a reasonable peak compared to those capital goods industry and all. And they are selling their products to all sorts of infrastructure companies like steel or cement or power or telecom or whatever or even defense. So that is why I chose Elecon Engineering because of the valuation. Patel also, when I bought it I think it was at a throwaway price. Now stock price has doubled, so it's not at all a recommendation. So I am selecting these two companies I have selected so far. So this is what I look for, the companies which are coming out from the crisis, which are cheaply available or available at a reasonable price. So that is why I cannot invest in capital goods and all sorts of companies.
You mentioned defense just now, Vijay. That's another space which seems to be getting quite exciting. But there, probably you're finding it a challenge to get good valuations now.
Yeah, of course. Day by day, they are becoming very expensive. But this is what it is. It happens whenever the sector turns around. No, in the beginning, before the turning around of the sector, you will get the price very cheap. Once it comes into the public domain, when everybody understands story, then for some time you will find the stocks very expensive. The same thing is happening in defense. Now it's like an open card, on the table, that everybody knows that defense is a big theme, defense is a big story, government is going to spend this and that. So that is why they have become expensive, and I think they will remain expensive. So they are not. I don't think they are going to fall, or you will get them at a cheaper. Therefore, you have to foresee the future and give a future discounting only.
Have you been able to include any defense stock in your own portfolio, given the valuations?
I had bought Hindustan Aeronautics. I had bought 2 years back at 900,000 rupees, but actually I couldn't hold on to it, and I exited early, unfortunately. But that is okay. This is the market. It happens. It's okay.
But tell me, small cap investing is never easy. I mean, some of these names that you mentioned, like Repro and Vaibhav, they don't give you rewards in the time frame often that you have in mind. You have to be very patient. How do you approach some of these names which do not actually start giving you returns in a 2 3 year time frame? Do you stay the course and wait for the story to play out, or do you cut some of them out of your portfolio? I mean, what is the balancing act between for some of these names which are not quite multi-baggers soon after you buy them?
You see, Weber did reward me maybe 1 year after I bought, and Repro had also rewarded me. But finally, but due to COVID and all, they got their disruption got disrupted, so the stock price fell down. So that is okay, because as long as I said, that stay in the sunset industry, sunrise industry at any cost. Cost could be high and cost could be low. Stock may perform, stock may not perform, but as long as the story intact, as long as you believe that the sun is still rising, so it's okay. Sometimes sun is in the cloud, sometimes it is in the open. So this is stock market. You are never 100% right. Even if 50-60% is your if you are right in this market, then this is enough for you. So I have patience here. I can hold on to my stocks for 5 years or 10 years or even 15 years. But of course, if they do not perform, and if the fortune of companies has turned back, then I would not hold on to the shares. But as long as story is intact, I don't mind holding them.
Mm. What in your book is a sunset industry, Vijay? Let me ask you that. I mean, what kind of sectors or stocks do you stay out of? Because these days, all kinds of stocks have done well. Coal India, for example, which in many investors' eyes would qualify as a sunset industry, coal, or NTPC, or even tobacco like ITC, they have done well. What are the sectors that you stay away from?
You see, I have never bought all these companies like Coal India and like REC and ITC. Of course, that was a bad choice, but it's okay. It doesn't matter. So so far, sunset industry is concerned. I will give you one example that I had bought one this IT industry in 2019. Sorry, after COVID in 2020 and 21, two companies I had bought. So one was Intellect Design, another was an IIT, and I held on to them. They became multi-bagger also in 2 years' time. But after that, 1 year back or maybe 1.5 years, I exited because I realized that maybe now the flavor in this theme is over. So that could be a sunset industry to me only for these two shares. But there is exception to the rules also. Like Persistent is at all-time high, and Coforge or some others, some not Coforge, some Scient and all these. There are 2-3 shares in the same sector which are at all-time high. So it depends. So what I will say, that if I find that a story in my company is over or plateaued or stagnant, maybe for a long time, maybe for 2-3 years, then I would like to exit. This is
Okay.
what I mean by sunset. Yeah.
Sure. You mentioned IT, but what about pharmaceuticals? Have you ever been a keen investor in that sector? I think I saw Newland Labs in your portfolio as well.
Yeah.
How's that worked out?
Worked out very well. I bought a truck around some 300-400 rupees. I don't know. After that, it went up 3,000 rupees. And 3,000 rupees, from 3,000 rupees, it fell down to 1,000 rupees. Now 1,000 rupees, it is back to 2,700 rupees. And all these things happen in a span of 3 years. So this is what your patience is tested in this market. So that has worked out well for me, Newland, and I think maybe the new path for this company has begun.
Hmm. We spoke about some of the construction companies, but there are some manufacturing companies which are not related to construction or engineering, which are, I think, better qualified as auto ancillaries. You do have stocks like Atul Auto in your portfolio. Uh, how do you see the road forward for some of these auto ancillaries now over the next few years?
I personally feel that road is very good. You listen to what that Maruti chairman had said few days back. Now they are also planning a fresh investments. All other companies are also planning, to increase their capacity. I think now auto ancillary industry should also do well. And Atul Auto is a automobile company, like they are into three-wheelers and all, with all IC engine and electric. Electric is future that we all know. So I think that the future is very bright for them.
And Talbros, is that still there or have you sold it?
Talbros, yeah, I have very small quantity, not meaningful quantity. I had 3% or something, whatever. I had sold it a few months back. I am
Hmm.
still holding just a small quantity.
How do you arrive at this sell decision, Vijay? I mean, we keep talking about buying and holding, but sell decision is also very important for a small cap investor. At what point do you say it's not working out and I need to get out? Or I've made enough profits and I want to leave the rest on the table and walk away with what I have?
No, I don't think that I sell any shares for profit because I have a big stomach, big belly, so I don't sell it for profit. And of course, if I find some another industry, if I find more lucrative than the previous one, so that is the only time when I will sell my shares and switch on to something else where I find bigger opportunity. That is the criteria.
Hmm. It's interesting to see a portfolio which does not have too much of financial stocks. But I mean, I saw your portfolio. You don't have too many banks, too many NBFCs. I mean, is there an aversion to that sector for you?
Not aversion. I had bought some Canara Bank and one of the POB and all 1 year back. But my problem with me is all these banks are large cap and all. So that is, I have a weakness that I cannot hold on to the shares which are liquid in the market. Whatever little bit money I have made in this market because of the illiquidity in my stock, because that stops me from selling whenever market is falling. And suppose if I feel that index is going to go down, say 10% from here, then it's a temptation that you can sell your shares in the market in spite of having a bearish view. You don't sell, so that temptation, I cannot resist to that temptation. So I have to sell. So that is why liquid shares I don't buy, and that was the reason that I. And second thing, this BFSI or mainly these banks and all they are very slow shares. There is no thrill. So that is, I want some. I buy some shares which are really. They should have growth and they should have fluctuation. Otherwise I don't get sleep.
No, that's a strange one. But you're not a trader, Vijay, are you? I mean, do you do futures and options? Because you said thrill and stocks should go up and down. I mean, do you trade actively?
No. I don't trade. I am just sitting like an elephant or whatever you call it, like a camel, as they say. I don't trade, but it gives me thrill. Okay, oh, today it has gone up 100 rupees, then next day is falling 50 rupees. So it makes me feel that I am alive. Like suppose something is happening. Although I don't take advantage of that, I don't sell them at any level until unless I have turned bearish in the company, which very seldom it happens. I don't sell them.
Mm. Now, since you mentioned that when you have a view that the market might fall 10%, you're tempted to sell large cap companies. What's your view now in the market, Vijay? I mean, if you had liquid large cap shares, would you hold them today or would you be tempted to sell them after the recent rally?
No, I do not have any large cap shares so far. I remember now. So all are mid caps only.
If you
And
had them.
if you, of course, I would have sold and bought mid caps, of course, because I find mid caps still have great opportunity. Udayan, I don't work or don't invest on the base of technicals and all, but I understand little bit technicals, mainly the basic technicals I understand. And I have seen so many, maybe hundreds of charts. I have seen technical things and all. Many mid caps and small caps they are making like a rounding bottom. There's a term better, that rounding bottom or triangle and inverted head and shoulder or no. It seems like the party has just started. I think the bull market for them has started. Could be 6 and 9 months old, but I think it's a long way to go. So I don't mind if I have liquid money today. I would buy mid cap even at this price.
What would you say is the probability of a 10% kind of correction in this market, Vijay, sometime this year? Would you say it's meaningful or would you say it's negligible?
It can come anytime. It can come, and it can come tomorrow. That nobody knows. But you think even this 62,000 BSE Sensex from 62,000, even during this all recession and all this negative theory and negative news, and it fell down to 51,000. It was hardly 11,000, not even 20%, just 15, 16, 17% it reacted. So if you say that now it will fall 10%, to me, it looks like that it is not possible, but everything is possible in this market. It can fall down 10%. I don't know.
Any regrets, Vijay, with your portfolio? Any stock that you can talk about which you should not have bought, but you bought? Because small cap is a difficult game. Everyone makes mistakes. What's the most recent instance of a mistake that you can remember?
Frankly speaking and honestly speaking, Udayan, I do not have any regrets. As I told you earlier, that I bought the Repro 10% or 9 or 10% of the company from 2014 till 2018 or something, and stock did not perform. So it's a failure, you can say that. But I don't regret, because I don't know next time what different I would do. I don't know. Or maybe you can say that I did not learn any meaningful lesson from this, because you don't know what is going to happen. It's like cooking. Sometimes you are cooking every time. Sometimes your food is different. Sometimes your food is not up to the mark. It's okay. It's a part of game. That is why we invest in 15, 20 shares. Not that every shares will perform in the same manner, in the same fashion. Sometimes 4 stocks will perform, 4 will be a laggard, then next time. So it's like a race. So frankly speaking, I do not regret.
Any other kind of regret of a small cap or a mid cap that you researched but did not end up buying, and you now think that you should have bought?
That regret will always be there in this market. As I had earlier said, that stock market regret is the lifestyle disease of investing. Every time you will have regret. You buy and stock goes up, you will feel that why did not I double my investment? You buy and the stock falls down, you will say, why did I buy at all? So this regret will always be there. So I think that in my life, my journey, I've come over that kind of mindset. I do feel bad, for a short time, maybe for a few hours or maybe for a day. अरे ऐसा करता तो वैसा करता ये करता, but ultimately then I also forget about it. जो मिल गया उसी को मुकद्दर समझ लिया, जो खो गया मैं उसको भुलाता चला गया.
Now, you said that you're sensitive to valuations. You like to buy stocks which are cheap, not when everybody fancies them and they have gone up a lot. Now, what metric of valuation do you regard most highly? I mean, do you look at trailing Ps? Do you look at forward Ps? Do you look at price to book? Do you look at discounted cash flows? I mean, as a small cap investor, what would you recommend as the most important valuation metric?
You see, I am a follower. I buy growth stocks. Okay, I don't buy value stocks. I have never bought stocks like REC and all, which are giving you 5, 6, 7% yield. That does not mean that's not a good investment. That could be the very, like Coal India has doubled in last 2 years, plus 8 or 10% some dividend yield and all. But as I said, it should excite me. They don't excite me. So I buy only growth stock. So what I do before buying a company, I am watching the company maybe for 2 years, 3 years, 5 years, or sometime 10 years. Okay. And whenever I feel now this company is out of the wood, management pedigree is still intact, and now the future of this company is going to turn around. So I just try to figure out that inflection point or that the down curve of the U, and I'm waiting for that. I can wait for that 5 years, and in most of the stocks I have waited for 3 years to 5 years, to buy them. When I find and when I'm convinced that now the bottom, that surface or whatever bottom has been made, then I buy in a big way in that company.
Have you ever been tempted to buy anything outside India, stocks outside India?
Yeah, I was tempted, and that is why, because of that 250,000, there is a restriction, so you cannot buy in a big quantity or big money. You cannot, export or whatever. So I bought some Google, last year, out of temptation, just as a souvenir. Okay, I am having some Google.
All right, Vijay, nice talking to you, and good to hear your thoughts as always. Thank you very much for your time today.
Thank you. So nice of you. Thank you.
If you like the video, do like, comment, share and subscribe.